Hi, welcome everyone. Today is the 21st of February. Had an exciting first month of the year, first almost 2 months of the year in crypto. I want to thank Bookmap for hosting this. Today we're going to go over our decision-making process and dive into Ethereum and how we kind of break down that market with our tools and what we have. Before we get into it, I want to go through a disclosure. Any information and presentations that we're doing here today are for educational purposes only and should not be considered specific investment advice nor recommendations. Cryptocurrencies, futures, options, forex, and stock trading contain substantial risk and is not for every investor. An investor could potentially lose all or more than the initial investment. Risk capital is money that can be lost without jeopardizing one's financial security or lifestyle, and only risk capital should be used for trading, and only those with sufficient risk capital should consider trading. Past performance is not necessarily indicative of future results. I'm John Slazas from Dharma Capital Trading. You can find us at dharmacapital.trade. Follow us on X. Check out our YouTube and our Substack channel. Our mission is to create a positive impact and help traders achieve their full potential. We empower traders with fact-based trading solutions that enhance self-awareness and decision-making. Our approach enables traders to execute trades confidently and effectively by facilitating a state of flow. So providing with the tools, fact-based tools to get you so that you can trade more intuitively. And fact-based trading is what it sounds like. We're based on facts. It involves making decisions on objective data and analysis. Less subjectivity. This reduces speculation and your subjective biases. There's no opinions here. It is what it is, and it's just your brain is the one that's telling you that it's not true. And so we're going to get into our approach and applying that to Ether. And I'm going to dive right into that. Let me flip channels here. I'm going to do a little education on our stuff here first. I'm going to clean this up for you. So what we're looking at here, this software complements Bookmap. What we have and we're presenting is we're showing you here what the previous month's high was, previous month's midpoint, previous month's close, and previous month's low. So this gives us a sense, how we doing based on, compared to last month. Here's the previous month's high, and this is just defining it. So when we started February, we basically closed, in the midpoint of January. And, this is just a great barometer for any trade period. So we're looking at monthly structure currently. We're starting top down, and we're going to dive in deeper, but we're just, going from a higher level first, and then we'll go into, kind of look at the weekly, and the daily, and then the microstructure. So, when you come into any time frame, are your net chains positive or negative? This is just a great example of a fact-based tool, just to have a sense of, hey, we're up on the day, we're down on the day. And if you're up on the day and you're selling, you're counter trend. So you need to be aware of that. Another good part of a range of any time period is the midpoint. So, are you below the midpoint or above the midpoint? It's just another bias. You're above the midpoint, you're above the midpoint. It's more positive from the previous range. And so you can use that again. If you're short above the midpoint, you should know it and you should adjust your tactics. When you're in alignment, and you're long and you're above the midpoint, okay, well, now you can get a little more aggressive. because you're in alignment with the facts. And that's what it's all about. And so, basically, starting out the month, stabilizing above the previous close, moved above the midpoint, and we make a play for the previous month high. This is kind of classic. If we're going to have a range trade, what are you going to do? You're going to go ping pong within the previous period's range to get to generate some interest. But we didn't do that this month. And what we did is we broke out to new highs. And then so we're just looking, and if we look at this price action, so this is, we've got, this is called time frame structure, and this is price structure. So we're looking at these peaks and troughs, and we can see that we've got higher lows, higher move highs. The market, makes a new high, comes back, makes a low, new high, new low, and we're holding this positive structure. Here we this is a key structure point, and so this is where you look for alignment. Let me just blow this up. So looking at price structure by itself, hold on one second. You guys aren't seeing my charts here? Got it. My bad. Let me fix that. Thank you. I thought I could use the OBS to switch channels, but I couldn't. So we're back here. All right, I'm going to rewind. So what we're looking at is a 60-minute chart, and I'm identifying the previous month's range. So here's the high, previous month's high, the previous month's low, previous month's midpoint, previous month's close. And going over that, we started the month at basically the mid. Obviously we start where January closes, and it was pretty much the midpoint of that range, and we digested around the previous day's close. And I was saying that, hey, if you're above the previous day's close, that's a great metric. It tells you something. You're below it, it tells you something. You're short in the market, and you're above the previous day's close. You just understand that you're fading you're fading the bias. The midpoint's another good barometer, of any range. So you've got a midpoint and you're above it, same difference. Okay, it's more likely to make a play for the previous period's high. Below it, it's more, and below the previous close, it's more likely to test the low point. It's digestive. Gives us, just a kind of a good sense. So for February, above the previous month's close, positive, working. Get above the midpoint. What's the expectation? Make a play for the high. What's different is that we broke out. Sign of strength. So we've got this follow through from January where we had a positive push. Now we have another positive push. So we're looking at time frame structure, just identifying the time frame, which is monthly time frame, high, low, close, midpoint, and now we have price structure working within that. And so here we've got a nice trend. We've got a market that's building higher move highs, higher move lows. And so and this market held that structure, and it's continuing to hold that structure. And so let's just dial in here a little tighter. So here's a here's a time frame structure. It's good to know the previous month's high. We have the market, we've got our price structure moving higher. We're moving higher. We're moving higher. Okay, we can't take out this high. What are our key structure points? Here's our first structure break. Here's our second structure break. And so what's interesting about this, just having all the facts, when you have all the facts, you can, and you look for alignment. Well, this alignment tells us that, hey, we've got a price structure here, but we also have the previous month's high. So when you're working in your position, your risk management, where, and you're long the market, where's the breaking point? Well, you need to take into account that the previous month's high here, not just take into account this price structure. Another thing to talk about when we're talking about crypto that's different from futures and different from trading stocks is that what's the real price? So we're using deribit data right now. And we use deribit data because it's a reference rate that we trade options, and it's a reference rate for the option pricing. So that's why we use it. And there's X amount of market makers on deribit. It's going to have its own price. Binance is going to have its own price. Coinbase is going to have its own price. Kraken's going to have its own price. And so, and those market, and you're going to have, and some of these aberrations are going to be a little more extreme on different exchanges that have less market makers. So it kind of throws a big wrench in a lot of the technical analysis. Is what it is. All of our work is quantitative, so we don't do any TA. But looking at higher move highs, higher move lows, that's a fact-based thing. If it's not doing it, it's not doing it. What you need to understand is that sometimes there's some it gets a little bit gray sometimes, especially when you have little aberrations. But you're always looking for alignment, and watching different exchanges is always a good thing to do as well. Is it stabilizing above those same price points on the different exchanges? So in this situation, we broke out of the previous month high. We held it. We pulled back and held it, sign of strength, and then we take out this high, and we're moving higher. And now we have some big, wild digestive action going on. Are we? The question is now? Are we going higher? Are we going to extend? So what I've done here is I've highlighted this price point where the market took out this high, pulled back to it, makes a new high. Now you have a low. We have a high, low, high. We've broken. We came below this point, but this is the real structure break point. So as long as we're above here, the positive momentum is true. Below here, there's a problem. So what else could we? Now we're going to start to overlay some additional information, to give us more insight to what's happened this month. And I'm going to put on what I call our over-under number. I'm going to zoom out here a little bit. So for us, when we're coming in at any time frame, and here's the start of February, we're looking at where's the real money coming into this market. Well, the real money at the start of February wanted to buy it wanted to buy Ether at basically 1900. So that's we didn't get that opportunity. Okay, so what else? So let's put. So this is called sentiment bias. This is a sentiment bias figure. I'm going to add. I'm not going to get too complicated here, but I am going to add what we call our critical range. And so our critical range is basically that zone that says as long as we're within this range, we're kind of going sideways. We get outside this range, and we can and this market has a potential to extend or break out. And this yellow line, we call it a directional pivot. That was in alignment with the previous month's close. It's not always the case. This month it was. So we knew that so in this structure, and this is called market structure. So we have price structure, we have time frame structure, and then this is market structure. We have the market opening up at a pivotal point on market structure because this is the rotational number within this key range, this critical range, and we have sentiment below the market, which is positive. And so being above this point, basically this is your pivotal number. You're above here, it's more positive. We're going to rotate up to this level. We're below here, it's more negative. We're going to rotate down here and set up a buy opportunity. They never gave us that corrective dip. They held above the directional, and the market made a move, came up and challenged this area. We had some sellers trying to defend it, but we started basing above this metric boundary. So basically, when you look at these, within market structure, you have a zone, that's a boundary that surrounds market structure. You have a couple different metrics. You have what's called a variance, and a variance is basically slippage. So if you have a system and you're looking to enter at a figure, you don't want to enter at the figure. You want to enter in front of it, so you make sure you get filled. And this whole zone is really signal acceptance, like you're at the level. It's basically your slippage area. And then the other metric is an alert distance, and this is a metric boundary for signal acceptance. So typically what you want to do is keep your signal acceptance within structure. and because if you do that, you can manage your risk. And that structure is where money's going to come in and make decisions. And so you're not getting chopped up with the predatory algos in the middle. You're focused on entering in signal acceptance. Okay, so we broke out of this critical range, and that gave us a lead into this signal. So this structure said we agree with being positive above the previous month's close, and now we move beyond this metric boundary. That's a positive signal. This previous month's midpoint was challenged, and we're in agreement with that the market's going to continue, and our expectation it's going to continue here, and this is where the momentum is going to be tested. Basing above here told us it's still, this thing's holding strong, and this was our positive signal. Now we have a breakout. So we know we have an expectation of the market going to the previous month's high, and these are our target expectations. And basically, if you look at, this is the critical range, you could just flip this, and basically we had a full extension of the critical range to what we call our upside target too. So this is a natural target for a breakout. We call it a 2-segment move, or a 2 average price map distance, 2 APMD move. And so the market attained our target. Now, this is the expectation for a trade, so that's where you base your risk management off of if you're taking a breakout signal. But sometimes you get into a situation where there's an event, and so we may be in that. We've got a lot of different things coming up. We've got a new fork coming up in Ether. We've got potential. We've got some decisions are going to be made on an ETF for Ethereum. So March is pretty interesting, and Ether's kind of teed up for it. And what we've done is we've had a linear move, and I'm not one to want to step in front of freight trains. So that's where you can just use your price structure. It's holding price structure. That's your story, and you're sticking to it. Now I know this is a key point. This 2-segment move is a natural stalling point, and the market did stall here. And so we're getting this digestion. So is this digestion ready to? Is that it? And we're going to kind of just pull back and go sideways for February, or are we going to digest here and then launch? You go back to 2017 crypto, you're getting monthly signals that blow through the UT4. They just, you get these monster crypto moves. Are we in that potential opportunity? Who knows? Could be. We don't really need to think. We can let the market tell us what it wants to do. But we know that if the market does start to trade back above 3,000, it's got the potential to have at least a $350 move, if not a $1,000 move. We are starting to work into the back half of the month, so how much time do we have left? But things can move quickly. Okay, so we've gone through a couple different things. We've gone through we're looking at this monthly structure now, and we identified this price point, which basically comes in at 2860. I'm going to add, we do have some other what we call minor levels, and these are just kind of like stepping stones as you're like climbing the ladder of market structure. And so we have this monthly price point at 2869 that's coming into alignment with the 2860 price structure. So basically, as long as we're above this base, it's all, this rally is still in play. And this is more digestive action, just like this is a corrective break. And you can see how we get these segment moves. This is a half segment move, full segment move. All right, so let's start. I'm going to flip into some smaller time frames. Okay, so this is a 15-minute chart. Let me clean this up a little bit. What's your, my time frame is monthly, and primarily, and I'll use the weekly structure and the daily kind of as a trigger. So I'm, on the, this is a little shorter time frame. And if we taking a look at what we've got going on here, basis the weekly. Let me turn off this monthly here. I left on the previous year's high just so as a note, hey, we're above the previous year's high. But here's the situation on the week. We closed basically near the high of the previous week, and a lot of times when we do that, the market, tries to, maintain that momentum, and you can see that we've, really based above the, the previous week's high, and we're still basically doing that at the moment. Here's that 2860 point. So this is all still in alignment, and so we have alignment with weekly structure. So I'll throw on that critical range. We can see that on basis this week, and we're at Wednesday, and crypto week goes through Saturday. So we're right in the midpoint of this. The sentiment bias is down at 2453, which is in alignment with last year's high. So that's pretty interesting. So if we have a big squeeze to the downside and they just give it all up, where can they go? Yeah, they could retest the previous year's high. And that's in alignment with this week. For now, what's happening, the market is rotating around this upside pivot area, which is very messy. So this is a little expensive, because typically when we get a signal like this and we break out and we fail, it's called a reversal, and it tells us we could see some type of corrective trade. But that corrective trade didn't follow through. And then we break out above it again, and we don't follow through, and we get another reversal. And so this setup here that failed basically was telling us the market might be more digestive, and that's what's happening on a weekly basis. And we do have a weekly structure just below this level, but if we do start to roll over, it's more likely with sentiment below the market that the weekly is going to try to make a play for 2733 based on this structure. And based on the weekly, if we start trading back above 2952, it's going to break this momentum, and that's going to more likely put us back in a situation where we're going to take out that 3000 and we're going to start to make a bigger move. All right, so let's keep dialing in here. I'm going to show you, and then we're going to go through the daily, going into more micro time frames, and then we're going to go into the microstructure as well. So the nice thing about our work in fact-based trading is it's basically all the same stuff. So whatever time frame you're on, you get a sense of what the opportunity is. So as I mentioned before, when we do get a close near the upside of the range, the market either likes to extend, or we're gonna, it's a classic, it pulls back. And so here's a situation that we went over. If this is on this, now this is a daily time frame. So it's identifying the daily previous day's high, the previous day's low, previous day's midpoint, previous day's close. So we're always opening up on the close, and the market can't trade above it, so we're negative, and this is your tell right from the get-go. The other tell, as I mentioned, is that when you do get a close near the high or the low of the range, it's either going to extend that, it's going to immediately extend this momentum, or it's going to fall back into it and at least test the midpoint. So it tests the midpoint, can't hold it. Again, another momentum signal. Now we're below the midpoint. You see, we get a pullback to it. Where do we want to go? We want to test yesterday's low point. It's basically it's just kind of getting the full range. Hey, we suck people in on the upside. Let's go see how far we can suck them into the downside. And, and basically we're seeing some stabilization above the previous day's low. So let's take a look at sentiment for the day. So sentiment for the day is a little bit below the market. So what this is telling us is that, based on this structure, and I'm going to add our level in here. So we like this 2860 level as a breaking point. So what this tells me is that, bottom line, if the market is that good, it shouldn't trade back below 2860. If it does, it's a tell that we're not going to have an extension in, like we've seen. We're not going to have one of these big extensions higher and a huge monster breakout into the end of the month. What's more likely is we're going to have more of this stop and go action. If we hold this level, we can absolutely have the upside event scenario is still in play because we haven't broken structure. We haven't broken the longer term price structure. Okay, so now if we did get that failure, what this structure on the daily tells me is that we could fail here, break structure, and then stabilize and get one of those situations where you get everyone sucked in and you get one of the that quick V bounce. But the expectation is that V bounce isn't going to follow through. And so even if that V bounce rallies it all the way back up to 30.50, the fact that we traded below here tells me that there's an issue with this market scaling. So it's a little bit of a nuance, but that's just how the kind of structure works and how you can use it. It's something to look for. We'll see how things play out. So so currently above the previous day's low, we're still good. Let me pull up our playbook. Show you guys something else. So what we've gone through, we had, well, let me add the, before I do that, let me add the critical range here. So it's the same thing, here's that key range, sentiments below the market, so that kind of extends it. We have the directional, you can see it was a little below the previous day's close. So as long as the market was holding here, it still has an opportunity, and then we get a failure here, gives you a big squeeze back to the metric, and we attain a full segment, and we actually attained a 2-segment move here. Oops. So we did a 1-2 segment move. So the market, when the market makes a trend move, it likes to trade in 2 segments on any time frame. All right, so what other fact-based information do we have that gave us insight to today's action? Well, we have what we call our playbook. And what that does, first it defines the state of the market, and we use color coding. So, if you really want to, at first glance, this looks complicated, but when you think about it and you get into it, if you have a strategy that you really enjoy, something that really works for you, something that speaks to you, something that you worked years on, this is your thing, this is what you do. Well, you get frustrated because some days it works and some days it doesn't work. Well, if it's a trending strategy, if you're looking to catch moves, it's not going to work well in non-trending states, in market states. It has a better chance of working in trending states. And if your strategy leans more to the buy side, or that's your mandate that you want to get long crypto, and you have a trend following strategy to do that, well, you're in luck because crypto's in a trend mode right now. But basically, this grid identifies different states, and so all the blue tiles are in bull trend states. Theta is actually in what we call a bull trend acceleration. So this is an accelerated trend state. And so this is just giving us some more insight to the nuances of the trade. This token is accelerating, and this token is positive too, but it's more digestion. So by having a better understanding of what the state is and the state characteristics, you can really optimize your tactics. And when you really understand, hey, this, I like to trade digestive states. I like them a little slower. I like that stop and go action. Or I really just like to look for these breakout things because I like to, I like to trade, daily options, and I'm looking for something that's going to explode and doesn't cost me a lot, and I can catch a move. Or I like corrective states. I love corrective states. They provide opportunities to potentially get on the next extension higher of a trend. So it helps to identify where those potential sharp pullbacks can occur, and then how I can where you can get back on it. And so these are all basically just lays the foundation. Simple as that. You just align your tactics with states, and then what we've been going over before, I'm not going to spend a lot of time on this, is just the structure. So where does that state change? That's what this market structure actually defines. And so if you're in a certain state with a certain structure, then we can identify what the strategy theme is. So Ether's in a bull trend state, market that's making higher move highs, higher move lows. It's trending. It's got good volatility, good momentum. Structurally, sentiment's below the market. We identified that with our sentiment bias. And because we're in this bull trend state, and because sentiment is below the market, there are certain strategy themes that are more likely to occur. And like, where do we place our bets? What's the most interesting thing to do? Well, if you're in a bull trend, the most interesting thing to do is buy a break here. And so we identify that. We call that a buy or fade. We're fading momentum into this structure area. What's another optimal thing to do? Well, another optimal thing to do is what would be called a buy DP reversal. Why? Because we're not going to, when the market goes below the directional here, it's a corrective trade targeting this area. This whole area is a break to buy. When's it going to turn? The market's going to tell us. It's going to start breaking structure, which it did here. But the real signal is when we get a reversal signal. So having the market trade back above 29.50, or really, if we get a signal back above the previous day's midpoint, that's going to be our trigger today that the bull trend's ready to resume. And if not, we're going to see this kind of sideways action, probing lower, trying to hit some stops, potentially breaking longer term structure, but for the day, we're still positive above this price point. So we're in what's called a hedge theme today. And so a hedge theme is where we either get a breakout, we get a breakout of outside the critical range that can't hold, and gives us a sell signal, or we can't maintain a trade above the directional, and we get what's called a sell DIR breakout. So this is a sell DIR breakout hedge strategy theme that kicked into play, and it paid out 2 APMDs. So this hedge theme completely paid out, and now it's actually teeing up a potential optimal strategy theme. So it's always the same. Whatever state you're in, if you're in this state and you have this structure, then do this. These are the best opportunities for this state and structure. This is where you want to place the biggest bets. And this is when the market's telling you this theme is changing. We're transitioning into something else, and to help and to make money and to participate in that transition, these are the strategy themes. So for Ether right now, as we go into the back the back half of the day, we've had a market that's been in a hedge theme, and anytime we're in a breakout, we're looking for the market to trend, and so we're looking to monitor price action for lower lows, lower highs. Here we get a break in momentum here, and this is what I was talking about on the opposite here, where you have a break of momentum here that then but it makes a new move low. So the expectation, since we broke price structure here, we didn't break market structure yet. That's the market structure trumps price structure. So we really need a reversal above market structure. Once we get that, that's going to be the tell. And so having the alignment with our long-term structure point, having the alignment with DT1 downside target 1, having alignment with the previous day's low, this becomes a nice base. And so is this hedge theme over? Maybe. We broke structure here, we broke structure here. This would validate that structure break if we trade above here. And if that is true, what's the expectation? Well, the expectation is it's game on again. And and then we can kind of take a look, and this just becomes then technical analysis. If we did break out here, then all the technicians will come and say, oh, is this expanding wedge this way? We had this flat bottom, some backward funnel kind of pattern, which is powerful. I grew up on technical analysis. That would be a powerful signal. But that's the trigger here, and so what this gives you is it gives you the trade vision to say, hey, what can it do? Well, if we do reverse here, we do get there, it has the potential to be at least a play for the upside pivot, if not an extension higher of the bull trend. Okay, so let's take a look at the order book now and see how that can give us some insight to what's happening at the moment. So I use the multi-book. So I'm not matching up perfectly. I like to see, you can see we've got some cloud notes that plot our levels. So I'm going to put our minor levels on here, which is basically where we're at. It's not a perfect match because we don't have the multi-book data. But it's pretty close, and it's going to give us some good insight. All right, so what do we have going on here? So the question is this break over? Is this corrective hedge theme over? Are we ready to resume the bull trend? Was this just a big squeeze? When we look back on the monthly structure, it's a bit of a rerun, right? You had a push higher, big squeeze, push higher, big squeeze, push higher, big squeeze. So it's this thing's stuck in a loop. So are we ready to do this, or is this the top for the month? UT2 is a good target, but we haven't broken price structure. So I'm always a big fan of saying that, kind of prove it to me. If we're heading lower, then the market's going to break structure, and it's going to tell me it doesn't want to rally anymore. And until it doesn't tell me it doesn't want to rally anymore, then I'm not going to argue with it. I'm going to look to participate in it, and I'm going to use all the tools that I have to do that. And so here, so this is a big mess. The fact that we broke this aggressive selling structure tells us we're more sideways. So it's telling me that I'm not fearful to an event to the downside. Can it make a new move low? Yeah, but my expectations, if we do get a break lower, at least for today, it might happen overnight, but at least for today, I would expect the market to if we break, bounce, and then chop, and then make a decision. Are we going to get a squeeze? Or is it going to follow through to the downside? More likely that would happen in the coming sessions. I like to use the VWAP. I like to look for alignment in the VWAP. Here I don't have a lot of data that I'm able to show you, but I don't know why it's not pulling up all the data. The spot's a little different. This is tether. This is the spot, and it's it's a little different, just as if you're looking at an individual exchange, it's a little different as well, and you're not seeing as much algo activity because you've got the different, less bots obviously, and less market makers are in just Kraken versus the multiple exchanges in the multi-book. Let's use Kraken. Let's not use the multi-book. Let's use Kraken here. It's easier to kind of dial in to see who's doing what algorithmically when they do that. So we're basically we're looking at this piece of action here, and with Kraken, the VWAP is higher above the market. It's coming in off of these highs here. And so what I'm looking at on the order book is, as long as we had this situations like this, when you get a big seller coming into in front of structure, Kraken data is a little differently. I don't have that chart in front of me, but these are things that I like to look at where, people are getting emotional, but it's in front of structure, and so that a lot of times that is a good tell that the market's just pushed to that extreme. And so here in the order book we can see this paper building up off the figure. So basically based on the Kraken data, basically here at 28.94, and what we're looking for to have happen is to see this liquidity, if the market's going to rotate higher, see this liquidity start to push up. And then, ideally what happens is the liquidity pushes up and it's basing above here, and that's and then if we get a situation where we get a lot of dark, we know that the market can really can make a kind of a quick move. And I like to look at, and you can see then where the other resting paper is coming in, and it's coming in up here at the downside pivot, which makes sense. Oh, I got the wrong market. I was like, what's going on? Sorry about that. So this is going to track closer to the perp. So here it's similar. You can see you've got, this is, I like to see when, you've got, some sellers, the big sellers are coming out around the downside pivot, so around this area. This is the area that these sellers are defending, because if this negative momentum is going to stay true, they're going to stick there. If we start to rally, if we do start to rally and we come into these areas and these disappear, that can be a tell to jump on things, right? So if you have someone, this bigger picture structure tells us what we want to do. So we know what we want to do. We know that it's very clear that this is the breaking point. Absolutely, it could just go to zero if it breaks below here. The fact that sentiment's here makes me question the ability to really extend to the downside. It's more of a setup when the short term is giving you a little bit of a tell where we could get a little head fake first, a little squeeze to bounce. So the bigger, what's the bigger opportunity that the rally starts to go? Because if we do break, it's not like we're breaking into a bear trend. We're breaking into a digestive state, right? So we're going to transition. Bull trends don't transition into bear trends. Bull trends transition into digestive situations and corrective situations. So what's the interesting trade and opportunity is if the rally is going to start up again, and so if we're looking at different, right now at the moment we're in the middle. It's at a minor level. It's not so interesting. The market is chopping around. What is interesting is if the market can get above here. And what I'll leave you with is, because we're getting close to the end of our time, watch you watch the liquidity here, and you can see I've got my large lot tracker on too. So this is one player here, and if the liquidity doesn't build up here, that can be a tell that we're going to go through it. And if we go through it, it's a big deal, because that's going to produce a reversal, and that's going to start that a bigger move to the upside. Something, at least a retest of 3,000, if not more, if not the beginning of a new extension higher. And you can use the VWAP as a guide as well, as kind of your tracker. If the market continues to correct, continues to probe lower here, and even retest the lows, but then stabilize, make a new low by a tick and turn. This is crypto, so it's more of a seismograph here. This is, the market is churning now. And so this then you can, the way I would use that as well with market structure is if we get this press down, we don't really have any big sellers in here. You've got some buyers below here, and we have some buyers off, definitely coming in here off our figure at 2860, 2850. So we've got people that are, there's liquidity that's building up here, and then using the V, you could use the VWAP now as a potential turn to kind of jump on the trend. So understanding the state, we're positive trend. Understanding the structure, where sentiment is, it's below the market. Understanding where we are in the time frame, we're pressing the previous day's low. Understanding the price structure, we broke, we don't have a smooth downtrend right now. So we might be in trend. This might be transitional, and if it does transition, it's positive. And if it does transition positive, then we have a what if. Then we have something that has the potential to go for this, because we're just, this thing is just knocking off targets, and so that's our next target. Any questions on that? All right. I'm just going to drag this over here. So everything you do and all these tools that you have in your quiver to trade, you want to just zero them down to what's factual. Anything that you can't put into an if-then statement, you need to question it. Because the problem is you can insert your subjective bias to it. You got this thing in the back of your head that's going to influence your trading, and it's going to stick you in. The worst thing it does, it sticks you in bad trades longer. It makes you hesitate and doesn't let you exit your bad situations. You're not able to trust your inner voice. When you get the feeling that anxiety is building up on a trade, that's a tell. So that's a tell that your body's saying there's something wrong with it. I don't believe in the subjective bias that you have, and it's fading the facts. And that's what causes that anxiety, because there's a problem. Unless it's all based on money, and if it's based on money, then you're probably trading too big. So you have to have proper size management for your capital. So that'll factor in there as well. But if you're trading proper size, and you're in an opportunity, and you get that, that little voice that you start to get some angst, a lot of times you need to listen to that angst and act on it. And what we're presenting here is basically just, it's proven. This is behavioral finance, and it is kind of highlighted in Daniel Kahneman's book Thinking Fast and Slow. The outside view offers more accurate predictions than the inside view. And with that saying is that we all live our lives making intuitive decisions, and most of the time they're right. But definitely in trading, you need to take a step back and slow down that process. You can't just be shooting from the hip. And that's what our method does. It incorporates the statistical outside view to help slow down the decision-making process to minimize biases. And that's what it's all about. So if you enjoyed this presentation, share with your friends. You can come to our website. You probably need to type it right out so you don't get sent to the fund. And we do post on X, and have some more tutorials on YouTube. And if you'd like, you can reach out directly to us at info@dharmacapital.trade. We got some good times ahead of us. Crypto's back. It's moving. So good luck. And we're going to introduce you in the coming weeks to some new talent, some new options talent, and some a behavioral trader that's going to come in that we work with, that trades trades a fact-based trading approach, and it's going to give you insight into how they use it. So thanks for your time, and enjoy your day. Cheers.